Hey, it is March 9th, 2021. This is Trading Homework. I'm here with Chris, Sell the Fucking Rip Trader.
Hello.
And uh, today I've got this longboat brewing company. It's called Yeah Buoy, and it is an Indian Pale Lager I'll be enjoying for this happy hour. With that, it's been a really volatile couple of days. So tell us what's on your radar, Chris.
This morning well, by the way, hi John. This morning when I started my trading thing, my podcast, the first thing that caught my eye was the fact that the rip, the bull rip didn't affect the banks. The dollar pulled back, the yields went down, the TLT went up, and gold finally gapped up. So those were the first things that I had noticed when I turned on my screens and the bell rang.
Yeah, and there's a lot of themes there.
Yeah.
And it's almost kind of counterintuitive.
Yeah. Because, and I said during my podcast that I wanted to ask you why gold and the bonds went up at the same time, because that doesn't make sense to me.
Yeah,
It should
so
be
one
one or the other.
explanation that I see about this is that the government bond market competes with gold for investment dollars. And so when the yield goes down, it makes the bonds less attractive compared to gold. And that ties in with TIPS as well, the Treasury Inflation Protected Securities, which are government bonds that they have like inflation adjustments, and so there's this whole complex relationship there, and it's reflexive. That's from George Soros' book. Which book was that from? I forget the name of that book where he was writing about reflexivity. And the feedback loops can emerge where the dynamic gets like this. So anyway, go ahead. And I reacted. I made a whole bunch of plays, but I don't want to just jump right in. I want you to keep going with So what was your impressions? What moves did you make?
Oh, okay. So the first things that I was watching was I was doing trade management. So I was short American Express, which I got my ass handed to me yesterday. So today I was doing trade management. I was down 250 and I monitored it, and it was coming back alive. And then I saw that there was a rhythm that was going on with the market where the banks were getting hurt, the credit cards were getting hurt, and the oil was getting hurt actually. So I was just happened to be short those two, and I was long the bonds. So I just let them ride out. I took them to what I felt was a comfortable place, and I exited them. At that point, I turned around, and this whole time I'm watching the yield, and I'm watching the VIX, and I'm watching the dollar bounce off of that trend line that I told you that we had discussed 2 days ago. And then I saw the TLT getting weak. So I bounced out of the TLT. I got filled on that. And I was waiting for a sell the rip moment. And, I waited until 11:30. So I was watching American Express. I was watching the XLE. And it looked like it was going to happen at 11:30, and then the market just kept going up and up and up and up, and it was kind of like dragging them along, like two magnets,
So you're waiting it out.
Yeah. So I waited until just about power hour, which is about 3:00, and I started seeing a little bit of weakness, and I waited and I waited and I waited, and then finally I took the trade. I think it was around 3:30. I shorted American Express, the spiders, and I shorted the XLE. And you saw what happened the last 20 minutes of the day.
So you're still carrying those, right? Through
Yeah,
the
I am.
close?
I held them overnight.
Yeah, because I mean that weakness that was really pronounced, but it was also, I would say, not really broad. So some things set up looking really strong at the end of the day. One was GameStop, and another was Riot. And I already had a position in GameStop. I put that on yesterday. What I got was it was a bull call spread. Expiring Friday, I think what I had was the 150 200. And
Hmm.
when GameStop surged above 200 this morning at the open, I rolled up from a 150 200 to a 200 250. And what that did is it locked in my gains so that or I'm sorry, it 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 locks in gains that were larger than what I had put down on the original bull call spread. So at this point, I'm free rolling to the end of the week on this,
Okay.
and it's $5 grand per spread that it can be worth at the max. That's in dollar terms, which would be 50 points for that
Hmm.
spread. And so if GameStop closes above 250 on Friday, then I mean that's pretty good. That's pays for a lot of puts that collapsed in value today.
Yeah. Right.
Yeah, and so I've got this really weird dynamic going where I'm playing on certain things to have their volatility decrease by putting on iron condors in them. One was
Hmm.
Tesla today, and another was the GDX. So I actually bought bear put spreads on GDX short dated, expiring Friday yesterday, thinking that like, man, this could like fall off a cliff. Like we could just completely implode here. I want something like a punt that'll help me roll down in strikes on my long dated minor calls. So, I picked out the weakest one, which was the GDXJ, bought bear
Hmm.
puts on that, and those just got steamrolled today. And so what I ended up doing when I see a big reversal like this, it makes me think the market's going to probably move into a new range. So I think we're seeing new trading ranges established, and so that's why I started putting on iron condors, and I'll probably put on some more tomorrow in GDXJ and in Tesla. The reason is these pay for the puts that got incinerated on the rise. The
Right.
credits I got. If the market stabilizes, then the credits I'm getting will pay me back for the puts that got incinerated.
Hmm.
And if the market goes back down, then I don't have to worry about the bottom end of my iron condor because I've already got huge put position that will suddenly become valuable. And so
Right.
I'm covered there. And on the upside, I got to rely on, if I get blown out on the upside on my iron condors, I have to rely on things like GameStop that I'm playing long. I'm long the some of the marijuana shares, like a lot of the things we talked about on the previous trading homework episode from I think it was 2 nights ago. I
Hmm.
put on a lot of those long plays, and it's they're not necessarily the thing that were up the most. And one thing I missed big was Riot. It was on my radar. I didn't put anything on in it because it still kind of looks mediocre. But I mean, what I missed out on was like a 35% rise today. That's big. So, you know,
Yeah.
that was an error to miss that. So anyway, I have to rely on those longs to carry everything if I get blown out of the top side on those iron condors. And if I'm lucky, I win on all legs. And that kind of thing does happen. Like you see it where like the financials were up, energy was up, and tech was down like a week or two ago. Like if you had those specific set of trades on, longs and shorts, you could have won on all of those. So I mean it
Uh,
does happen sometimes.
yeah. Sorry, my son's trying to give me a hug. Love you
Sure.
too, kid. Um, to to go off of that, uh, I don't like you, Liam. He broke my train of thought. Sorry, you're gonna have to pick back up. There was something I wanted to go off of what you just said, and
I was talking about longs and having longs and shorts and iron condors on, which is it's and I have a long bond position, long TLT, and I have a short HYG position. And by the way, that hedge has worked so well. Like it was never really participating in the rally today, which is kind
Hmm.
of a sign that like, hey, this is like bear market rally kind of a thing. The volatility is expanding on things, and that's not constructive for a bull market when volatility expands. And you're seeing like the Nasdaq was up 4% today. Well, what if it's down 4% 2 days from now? I mean,
Right.
that's a huge range expansion.
Yes. Now okay. So it was you said 30% was a lot to miss. And
Yeah,
I made a comment today on my podcast that 30% is a lot. So
yeah.
I felt your pain right there. The other thing I wanted to expand on, and more pointedly, was the cues. Um, I was staring at the cues today, and they have a pretty big head and shoulders in the daily and the 4 hour that has the measured move has not been completed to imply that there's more downside.
Yeah, so like an ABC kind of thing. And maybe this is like the B, right?
Let me do this real quick,
Okay, yeah,
and
yeah, go ahead.
you'll see what I mean.
Yeah, let's take a look at the cues.
There we
It's
go.
a really important chart right now.
So we got 1, 2, and 3. And if you look on the bottom left and you look at the top right, you can see that plain as day.
Yeah, so
As
is
soon
that so is that an ABC down, or would you say that's just like one wave down?
Oh, I don't do Elliott waves. I had somebody try to explain it to me. I had a grasp of it, and then they started adding subsets of subsets, and I was like, you know what? Screw you. I ain't doing Elliott waves no more.
Yeah, I don't do Elliott wave either. I mean, so
What do you mean by ABC down then?
well, I mean it's an Elliott wave language, but I don't really follow it closely. Like someone was pointing out that like that first leg down was an A, and then it had a B up move, and then it had a C down, and they're like, okay, this is it. Like it's exhausted on the
Oh well,
downside. But what I see is
yeah.
I see like really wide bars. I see broken charts all over the place. So I'm really negative on this. If you notice, like a lot of the people who've been around the markets for a long time, they're really suspicious of this rally.
Uh huh.
And I mean, they were ready for rally. They were looking at any rally as a place to rebalance and de-risk. And I think that that's kind of what's going on here. We get the put punters incinerated today. We've got
Right.
the people who shorted too late getting squeezed, and
Mm-hmm.
so I mean this rally, it's normal thing in a bear market. I remember in 2008, I think it was September.
Uh huh.
I think it was before the Lehman Brothers thing, but it might have been right after. I don't remember the exact timing of it, but the TARP bailout announcement, that's Troubled Asset Relief Program. Well,
Yeah.
when that
Yeah.
was
Yeah.
announced, the S&P 500 gapped up like 10% or something, or almost 10%. XLF, the financials, the ETF itself gapped up 25%.
Hmm.
And, so this kind of volatility where we see ARK was up 10% today, it reminds me
Yeah.
of that. It's like, this is the kind of volatility you see in the middle of a bear market, not during a constructive bull run. So now
Right.
I'm not saying that these stocks can't go up and make new highs, but I was in a conversation with, well, it wasn't really a conversation. I was replying to uh, a skeptical a message that was skeptical of the rally from Mark Minervini, where he was talking about if the if we're lucky enough to get a blow off top, you better get out of your shares because it'll probably be your last chance to. And my reply was, we're probably not going to have a blow off top in anything other than GameStop, or actually, I think he said Climax top. And so
Mm-hmm.
I don't think we're going to have a Climax top in anything but GameStop and maybe Bitcoin. So like Riot Blockchain and some of that stuff. mean, those are the strongest looking charts. And I mean, I don't know why anything but the leaders would have a blow off top. So, I'm long GameStop. I got long Riot at the very end of the day, like the very end of today. And I call this a 6-inch punch trade because there's still 3 more days till expiration. And, I had to pay up for it because the implied volatility is high. But it just looked so constructive at the end of the day. So anyway, the rest of the charts though of these big tech stuff, these are really, really broken charts. I'm glad I did not put an iron condor on Square though. Remember we talked about Square and then I might put an iron condor on that. I'm glad I didn't. It was up like 12% today. Yeah, I mean, just while volatility is still expanding, it's dangerous to put this stuff on. But it's a bet on volatility contracting, and I think Tesla was so volatile today that we're likely to see a little bit of a contraction, but it'll be short-lived, I expect. And it may not even happen. Like it may go down and make a brand new low tomorrow. It's that crazy.
Riot looks good on the 4-hour.
Yeah.
And it looks good on the 30-minute.
Yeah, the 30-minute was what I was looking at. And so at first I was looking at it, I'm like, there's a resistance there, that's running into. If you dropped a line down on that 4-hour chart across those peaks, you could, no, go back further. Yeah, you could put it there. So there's a resistance there. There's another resistance if you connect the peak all the way from February 18th or February 17th.
Like that?
No. Go to that peak on February. Right there. No. Go to the left a little bit. Go a little bit more to the left. Right there. Whoa. Yeah. That peak right there, and just draw that down. A line from that peak, all the way to down across the peak on March 2nd, and you'll see that. No. Go to the peak, not a horizontal level. Yeah, that peak right there. So start there, and then draw that line down where across that resistance level on March 2nd.
Like this?
Yeah, and now extend it. No.
Oh, okay, like this.
Up a little higher, right there. That's it. Yeah, I was looking at that and thinking, there's kind of a resistance there. It looked like resistance to me, and when it broke out above it and then held, I thought, okay, maybe this is good. And what I saw was a really tight pattern at the very end of the day. And we see that oftentimes where stocks will gap up, is that they'll have a really tight pattern at the end of the day. So, I mean, I don't know what's going to happen, but what I ended up getting was I got some of the 60-75 bull call spreads expiring this Friday.
Right.
And I ended up getting those for, what was the price? The price was 15-point spread. I think I had a return to risk ratio of like 8 or 9 to 1. And I liked that because if you look at the old highs, it's around 80, right?
How much time did you give yourself?
Just till Friday.
That's a hell of a move.
Yeah, but I don't think it's going to get there. So, like, I'm short the calls. I'm short the 75 calls. I'm long the 60s. So it's only got to get just a little above 60. I think my price was like $1.75 or something for the spread.
Oh, okay. I am sorry. Now I understand. You have a bull call spread and you're selling the 65s.
No, I'm selling the 75s.
Oh, okay. All right.
So it's a 15-point spread. I'm buying the 60s and I'm selling the 75s.
Oh, that's great.
Yeah,
that's a great trade.
It looks like it could do it, and it was so low risk because you don't have to put stops on or anything. And like, if it looks weak tomorrow, I could close it out with still some time value left. So
I'm looking at a cup and handle in the hourly or the 30-minute, however you want to look at it. That's what I see.
Yeah,
an asymmetrical cup and handle in the bottom right.
Yeah, so it was looking strong at the end of the day when the rest of the market was looking weak. Also. I mean,
right.
I'm getting a signal that my internet connection is weak. The stream health still says excellent. So
I hear you fine.
okay, probably just a hiccup. So yeah, Riot and GameStop are. I mean, they're the two strongest stocks right now that are on my radar.
Game.
Yeah, and so the way that I'm doing this, by the way, is like I'm rolling up. Like I have the 200 250 bull call spread, but that's rolled up from a 150 200.
I cannot believe Game is still doing this.
That's what I'm saying, because it was hanging out there consolidating, like making a bull flag. It's like, this is nuts.
Yeah.
It's good. It's going to keep moving.
Unbelievable. All right. Well, anyway,
Yeah.
I have not tried, even attempted to trade this thing.
You know, I think I was telling you the wrong strikes. You know, as I'm looking at this, I think what I had was I had the 200 250 and I rolled up to the 250 300.
Okay.
Yeah, and the idea here is I want to be short further out of the money and I want to be long near the money, and it's cheaper to do it this way. You know, if I lose, I don't lose as much, and if I win really big. And if it just keeps moving up, I just keep rolling up, and I'm locking in gains the whole way.
Yeah, I hear you. I feel you.
Yeah, I mean that chart. I mean, to me, it looks like it's about to do a Volkswagen, Chris. In fact, if I get the chance, I might even just buy out the short leg, and you know, if time decay burns it up and it consolidates and looks real strong, I'll just close out the short leg, see if it Volkswagens, or maybe roll into next week.
I've heard you say this quite a few times. What's a Volkswagen?
Oh, so Volkswagen did one of the most incredible blow-off climax tops that the world has ever seen.
I thought it was a try
and find an article that has this chart, because I mean, you got to see it. This thing goes up like 20,000% or something in like no time. This is the biggest short squeeze ever.
Mm-hmm.
Yeah, let me see if I can find an article or a chart on this. Volkswagen short squeeze. 2008 is when it happened. There's a Wikipedia article about it. Let me go to images here. Okay, so I'm showing it on the stream. There's some images of it. Let's see if we can get a scale here. Okay, so it goes from around $200 or 200 euros per share. Start of the squeeze, 210 euros per share.
I don't have it yet.
Okay. And it goes all the way up to 1,000 in no time, in a flash.
Oh, there it is.
Yeah, I don't know if it happened over a period of like a week or a day.
Jesus.
But, it's incredible. This is one of the biggest moves ever. And so what people are saying with GameStop is like, look, this was GameStop right here at 400, and then it went down to like 50 or 150 or whatever, and now the real squeeze is about to begin. And people have a $1,000 price target on GameStop based on this Volkswagen short squeeze.
That's crazy.
Yeah, and so it makes me want to buy out that short leg if I get the chance. However, like, everything has to align just right, because you know I'm just taking so much more risk when I close out that short leg because the options are so expensive. Right. I mean, there are people who have 800 calls, you know, the 800 strike calls on this right now. And I'm not doing that. I'm buying like pretty close to the money, like just out of the money calls is what I'm buying. And I'm helping to fund that by selling out of the money ones, but only enough that are covered. I'm not selling more contracts than what I'm buying because of this, the potential for this. So like, depending on how you structure it, you could really get wrecked even if you think you're covered. So like even there are some calendar spreads that normally would be considered safe to do that could destroy you. Like if you, let's say you're long, like a 300 call and you're short a 200 call, but the 300 call you have expires in a month. The 200 call you're short expires this week. Well, if it goes to 1,000, you're gonna have a real big problem.
Hmm. Yeah.
So yeah, calendar spreads, in my view, are very dangerous on this. So the way I'm doing it is I think pretty conservative, and because of the time decay on the high implied volatility stocks, like if it doesn't move, you're really burning up money if you're just buying outright calls. But by doing it with the spreads and keeping it really short dated and being tactical about it, I've made a lot of money doing this, and it's working so far. In fact, like
Nice.
I've already locked in more than what I have at risk. I've locked it in as a profit already this week on it.
So how do you look at the short interest on this?
Well, the short interest numbers don't update all that fast. But
It's
one thing
like
I
every
do
two
keep an eye
weeks.
on is the rebate rate, and the rebate rate is rising for things like ARK. I don't think it's really out of hand yet for GameStop, but yeah, the fee rate. The fee rate is what I mean. So like
Hmm.
when people are short this thing, what's it costing them to hold it short? And that's a problem here for people who thought that GameStop was going to go back to like $20 or $30. They thought that they could outlast it, but they're paying a huge interest rate to hold this thing short. I mean, I don't know why. I mean, I guess at the institutional level, they can't really go in there easily with bear put spreads and things like that. I
Hmm.
don't know. I mean, as an individual trader, bear put spreads are the way to go if you're trying to take some money off this thing on the short side, because you can
Right.
control your risk so well. I mean, look at how I did it with Tesla last week.
Right.
So, I mean, just outright shorting this thing, or even worse, naked shorting, it's just crazy. It's just crazy.
Yeah. No, not for me. I can't. I
So,
just can't bring myself to touch that thing.
yeah,
But
one
hey,
other
more
thing I want
power
to talk
to
about
you.
with GameStop before we move on is I wanted to recap the narrative about the rolling short squeezes. So we had talked about a series of campaigns in prior shows,
Hmm.
short squeeze campaigns, and the first one started when the market bottomed in 2020, March of 2020. The short squeeze that started then was in Overstock.com, which is one of the most famous uh, stocks in the news for naked short selling.
Right.
And the central character there is Patrick Byrne, who was the CEO for a lot of that time. He has only recently stepped down from being CEO of Overstock.com. However,
Right.
I suspect that he's still involved with the stock and that he was a participant of the short squeeze in Overstock. I
Right.
think that he knows enough about short squeezes to know and naked short selling to know where to look for the next squeeze, and I think he found it with GameStop. And I mean, whether it's him or his financial advisors or his buddies or his attorneys or whoever's finding these things,
Hmm.
I think that um, their next candidate was GameStop. I don't think they're done squeezing it. I think they're going to try and pull that Volkswagen super move with it. And once that happens, that's when they're going to turn their sights on the next target, which I think they may already be getting started, which is silver. I think it's their third and probably final target. And so the
Right.
idea with the Overstock.com short squeeze, where they ran that stock up like 50-fold or something in 4 or 5 months, the
Hmm.
idea there was they were able to build a war chest big enough to essentially, let's say, give the entire financial system a severe case of heartburn on the very next short squeeze, which is GameStop. That one is so big that, I mean, we're having congressional hearings about it, and
Yeah.
it's not over. So,
I think they were just upset that deep fucking value made hedge funds look stupid by using an online forum
yeah,
called
but
Wall
I mean
Street Bets.
that guy's a scapegoat. Like here's why I say that, because he's not an operator. He's not really a campaign operator.
Uh-huh.
What he did was he just like threw all this money in the beginning. There was no campaign there other than like, hey, I found a value play and now I'm gonna YOLO it. Like that was really like the effectively what he had done. The kind of thing
Hmm.
I'm talking about, Chris, is they are actively managing the share price. They're in there with so much money that they can't get it all in all at once. You know, anytime that they're moving in and moving out, it's moving the shares. They have a lot of control over it, but certainly not complete control over it. Like they can't, they're still at the whims of the market. Like if
Hmm.
everyone wants to sell, they can't hold it up. And so when no one can buy anymore, that really kind of like stopped that campaign in its tracks. So I think they kind of regrouped and now they're ready to run it up again. And after they achieve this, the next thing, their next target probably is silver because silver is how you can make an attack on the dollar itself and the Federal Reserve. And I think that was really the ultimate goal from the beginning.
Hmm.
So, I
Hmm.
mean, we'll talk more about it on future shows. We don't have to keep dwelling on it right now because I
No,
mean,
no,
there's so
no,
much
no.
more
I'm
to talk
following
about
you.
right now.
I'm following you. I'm looking at the gap up when I thought actually that silver was going to get decimated because of that double top. So that has me questioning myself. But it is at a resistance level,
Well, if you
right,
look at when that
right
huge
there.
gap up happened, that coincides with the huge run up in GME. Which here's what that tells me is they're actually rotating money from the GME campaign into silver at that time. That's what it looks like to me.
Oh, you
And I
talking
mean that
about?
was not
Are
like
you talking about this?
yeah, exactly.
I'm
That
talking
was
about
not
this.
Reddit discovers silver, okay? That's not what
No,
made that bar.
no, I'm looking at this one.
Oh, you're looking at that one. Okay.
Yes, I was all about double top. Silver's got nowhere to go, and then it gapped up today. But you know, because the market gapped up, silver followed. Silver likes to follow the market for some reason. But go ahead. I'm not trying to poo-poo your
Yeah,
idea.
hey, my mouse battery just ran out. I think I have another battery in here. Let me see if I can switch to that. Yeah,
But,
I do. I have an extra battery I can switch to.
but
So, yeah, about that gap up, like remember last week when everything got creamed in the especially like the miners and stuff, and I told you I was rolling down in strikes on my miners.
uh, rolling down strikes on your miners. Yes.
Yeah, so I have out of the money miners, and I rolled down in strikes on those last week, and that has
Mm-hmm.
worked out very well. Um,
Because you
because
took
now as
profit.
we're bouncing, it's instead of adding contracts. So what a lot of people do, what I used to do, was I used to add contracts when they were down. The problem is, it's that works when your stock is trending up. But when your stock moves into a lower range, the problem is now your money's burning up faster because of time decay. If you're buying out of the money options, then now they're further out of the money. It's burning up at a faster rate, and it's easy to discover like that you have a problem too late. Like, hey, where did my money go? Well,
Mm-hmm.
it burned up on time decay because you didn't roll down in strikes, and the price is
Right.
lower. See what I mean?
Yeah.
And so what I did is, like, even though it takes a debit to roll down in strikes, but keeping the calendar the same, it takes a debit to do that. But what you have to weigh that against is if the price stays around at a lower range, it stays in a lower trading range than where it was when you first put that on, you're burning up your money faster on the long-term options that are out of the money.
Mm-hmm.
And so by rolling lower in strikes, you're essentially keeping that option in a spot where you're controlling the time decay. That's the reason to roll down. And then when the market rallies back up, you're making money that much faster. And so instead of adding contracts when it moves against you, there are times to do that. like when the trend is in your favor. But when the trend's not in your favor, I find it's better to roll down in strikes rather than add contracts.
Okay. So instead of averaging down, you just roll down. Okay.
Yeah,
I
and
got you.
it's a debit from the account, which means you're adding capital to the position when you roll down in strikes.
Right. Okay.
However, if you're adding contracts, you're also adding capital to the position, but you're adding it to a worse position. By rolling down in strikes, you're strengthening your position.
Right. No, I feel you.
Yeah.
I actually had a conversation with somebody about that a week ago. They were in a losing trade in TLT, or close to a losing trade in TLT, something along those lines.
So they're long, or are they long? What calendar?
They were long. I don't remember where it was. I don't even think I actually asked them. And the basis of my question was, I want you to ask me the same thing, but now put yourself in the same position. So in other words, the question was, should I stay or should I go? And I think he was down like maybe 30% or 40%. And I think he expired in 3 days. And I'm pretty sure that's what it was. It was somewhere around there, but
that's not a lot of time.
Right. So I posed the question back to him. What do you think you should do? If I asked you, what would you tell me to do? I said, you already know the answer on what you should do. You're asking because you're hoping that I'm not going to give you the answer that you want to hear, which you're not going to get.
Yeah.
Which is stay.
Right.
So close it out, try again, longer date. Good luck.
Yeah, well, and it's depending on how much money is left. If you let the option get too close to expiration, or I should say, if you let the position get too close to expiration, or you're too far out of the money and it just burns up too fast, then you run out of ways you can roll it. And so I'm a big fan of rolling positions. You can even do ratio rolls. And so say the market fades on you, but you still think that it's going to make a move. What you could do is, for every 2 contracts you had, you can roll into 1 contract. So you're essentially doing a 2-for-1 split on your position, in a sense. So you cut down with some ratio. You could do a 2-to-1, 3-to-1, 2-to-3, whatever, however you want to do it.
Right.
But you can reduce the quantity of contracts you have. Take the net capital, or the net sales proceeds from that. And buy a stronger position, maybe one that's at the money instead of like far out of the money.
Mm-hmm.
If you still believe in the position, you can do things like that. But that's only if you don't let it get so far gone that you're throwing money away no matter what you do.
Right. Yeah. I find myself in those positions quite often because I'm early. I'm right, but I'm usually early.
It's easy to be early. I mean, with the TLT thing, we were kind of early, but I built it with the back spread. And so when, I'm paying time decay, and I did it with a ratio back spread. So the time decay is pretty high on the TLT position I have. What I have is I'm short the 35 strike it's April monthly expiration. I'm short the 35 strike, long the 39 strike. And then and that gives me a small credit, which I use to buy 3 147s. So short the 135, long the 139, and long 3 147s. And that all adds up to be about nets out to a wash. And so what happens is, as time goes on, if I don't get a big up move, then I face time decay. But if the price backslides on me, I don't really lose money, and so I can reset the position lower. I can roll down in strikes on the whole thing.
Okay. I have a pretty simple formula. If I'm not making money in 2 days, I'm out.
Yeah, and you know what? Running quick is a good thing to do. It's a survival tactic that, I'm not one of these diamond hand YOLO guys. It's you can make a lot of money like that, but you can also lose it all. So, yeah, running quick is a skill. It's a survival mechanism.
The way I see it is, if my money's not making me money in 2 days, I'm losing money because I should be making it somewhere else.
Yeah. So, anything on your radar right now? I mean, I told
Yes.
you I put on some positions in the marijuana stocks, and these are more longer term positions. I've still got all the miners. I've still got the Southwest Airlines we talked about from a few weeks ago. I actually rolled that one down. The Carnival Cruise Lines from a few weeks ago, I rolled down in strikes on that one too when it was down. So I mean, these are springing back nicely and getting gains now.
I am short XLE, the Sector Spider crude
Yeah, can we
companies.
look at that chart? Let's do a
Yeah,
breakdown
sure.
on that chart.
Yeah, sure. Let me move my sharing. Where is it? Escape. Is that how I do it? How do I do that? All right. Control. That. No, that didn't do it either. Are you still with me?
Yeah, still
All
here.
right. So, I don't know where my little thing went to move my charts around, so I'm just going to type them in.
Okay, yeah, that's fine.
All right. XLE. So we got to the big old bat wing thing, where it looks like a harmonic bat, or they call it a harmonic pattern, and it looks like a big old bat.
Okay,
You know what I'm
yeah,
talking
I
about?
see that now.
Yeah, I don't do the measurements of this has to be this long and this has to have this angle and all that other crap. I don't do that. If it looks like a bat, I'll trade it. So that's what this looks like. It looks like a harmonic W, and it has that bat formation, right?
Yeah. Oh, and
So
that just filled that gap, didn't it? Look at
it did
that.
just fill that gap. And as soon as I saw it fill that gap, I took it short, and that's what it did.
Okay, it's starting to roll over now.
And what it did at the end of the day was that. That's 12 o'clock. That's 1 o'clock. And I think I shorted it right. Well, I actually scaled in. I scaled in at around 11 or 12 in TradeStation.
What's your
And
time
then
frame for the trade, Chris?
the time that I got in on TradeStation. Hold on, I got to open it up.
No, no,
Oh, you mean
your
how
time
long is
frame.
my trade for?
Your time horizon.
Oh, until it starts showing strength again. I have no preset time.
I got you.
If it gaps down tomorrow, I'll hold it. If it comes up and retraces 50%, I'll probably get out. I'll look for a double bottom, and then I'll get out.
Now, I mean, if this is a major reversal happening here, would you consider like rolling down in strikes?
No, I'll hold it until I'll hold it for the next day or two, and then I'll get out and I'll just move my strikes out farther. Same strike, just out farther.
Oh, I got you. Okay.
I'll reinvest my money back into the trade.
Yeah.
So
And
I know
so do you add money to buy time, or do you roll down and out on puts to
No, I just take my original investment and my profits, and I will get
So you might
into
have
the
fewer
same.
contracts then
Right.
when you
I
go
may
out.
I may
Okay.
not. I
Yeah.
don't know. It depends on how much I make. Like right now, well, today I did 40 or 30% on the XLE, and then today after the morning trade, I did another 20%, I think.
Mm-hmm.
But I actually did a swoosh, so I protected myself with your little swoosh thing.
Yeah.
I
Cool.
did. I did a. Oh, that's right. I remembered now. Because I have a trade in TradeStation, and then I have another trade in Fidelity. And Fidelity, I did the swoosh. So Fidelity is 10 days out on the short and 3 days out on the long.
Yeah. That sounds about right. Where you're wait, you said 10 days out on the long, 3 days out on the short.
No, reversed.
Oh, the other way around. Okay.
Right.
Oh, right. Because the short is the position you're trying to carry. You're trying to protect the short.
Right.
Yeah,
Yeah.
yeah, that sounds about right. And so those puts, like they're not gonna. Or, I'm sorry, the calls, the protective calls. You have to like roll that or like manage that part of it aggressively, but it can help keep the loss from running away from you.
Right. And
Yeah.
that's the goal. If I'm seeing weakness tomorrow, I'll close them because
Yeah,
I
so
don't need the
I love
theta.
that idea about like a 3-to-1 duration mismatch seems to be like that's a pretty good way to do it for short term trades.
I did 5 contracts short and 3 contracts in calls. Five puts and 3 calls.
Yeah,
And it's actually pretty dead even right now.
got you. Yep, there'll be some escape velocity there. Like if it runs away from you, say it gaps up like I don't know 4%. Well, that's probably enough to like where the profits on the calls are going to outweigh the losses on the puts, but
Right.
that's not what you're looking for. What you're looking for is like a longer duration move down, and it's easier for those puts to outrun the calls because there's more capital in them.
Right. Right.
Yeah.
Absolutely. But we also have that 1.9 trillion tonight. And I saw the warning for the what the hell is it called? The crude API, and I didn't see what it reported, so I don't know what the API reported.
Got you.
I'll have to look on investing.com later. So there was that, and then there was the American Express.
Take us through the American Express trade because I mean you've been working on that one for you called that out. I think it was on March 3rd that it was on your watch list.
Yeah. So I love American Express, and there's a reason why I love it because it shows its hand a lot. And what I mean by that, it's going to tell you what it's going to do, and I love it. I really love the fact that it does that. Well, unfortunately, it took me behind the woodshed yesterday.
Yeah,
Yeah,
happens.
yeah, and it showed me a thing or two, but I had some. I don't see my drawings on here. I actually drew what it was going to do, and it did it. Let me see if I can find those drawings. Today. There we go. And it came. All right. So I said it was going to do this. Well, it did this.
All
Right.
right, talk through those price levels because your chart may not be up to date
Okay.
with the stream.
So I was already short on the open, right? And I was
Okay.
down a couple $100. So it moved on the open from 140 or 150. No, it was 152 all the way down to 144-ish.
And that's today
That's today.
on a day that's strong. Like the market
Yeah,
is
it was
ripping.
it was a $6.50 move. It was like 4%, I think.
Yeah.
I
Wow.
don't exactly remember. I have
Was
it.
there a catalyst for this, or it just it's just overextended?
It was overextended, and because it's not a credit card, it's a charge card. I think it had to do with the yield. I
Aha.
think, but whatever the catalyst was, I don't care. Even if it was saving grace and I got lucky, I'm good with it.
Yeah.
After it had created its move, I drew this. I drew it up to, I think, where did I draw it up to? I drew it up to, is this American Express? Yeah. I drew it up to here, and then I drew it down to here. Or was it, wait a minute, I might be thinking of something else. Hold on a second. Let me check XLE. No, it was American Express.
Could it be XLF? Because we were gonna look at that too.
No, it wasn't. Oh, I see it. AXP. Yeah, I'm in AXP. Why is it not showing me the same freaking chart? Let me go to the 1
And you know
hour.
what? As I look at this, Chris, it looks like kind of negative heading into tomorrow too. You're still carrying this short?
Yeah, I am.
Nice.
Give me a second. So
Yeah, go ahead.
Tuesday, I see the drawing here on this one, but I don't see the drawing here on this one. Why is that? There it is. Okay. You see that little drawing right there?
Oh, yeah, yeah. Okay.
All right. So it came down to here, and then I drew this up to here,
To
and
148
then
and a half.
to 140, yeah, 148 and a half. And then I drew back down and I said it was going to, if it didn't continue, it would tomorrow. And that's
Yeah.
exactly what it did. It continued down. So I took advantage of that. That was at 11 o'clock, 11:30. I gave up and I let it go and I let it go and I let it go. And then it popped up to the 146.30 range.
Mm-hmm.
And I shorted it there.
And you're not shorting shares. You've got puts on this, right?
No. Yeah, I'm sorry. I have puts. I have how many puts? I have 5 puts at the 145 strike, and I took them at 3 o'clock, between 3 and 3:30.
From yesterday.
Today.
Oh, today.
That's today. Yeah. I had them yesterday. I got out at 144 ish.
Oh, nice. Okay, so then you essentially like reloaded the position.
I did. Yeah.
And it looks like we may get a gap down tomorrow. It's hard to say, but I mean, this market is just chopping like crazy, and that's not constructive.
No, it's a bad flag. That's why
I think
I
you have the
held,
wind at your back for the market. But I haven't looked at XLF yet today, so.
Then I already showed you the XLE. What was the other one that I traded? There was the AXP, the XLE. What else did I do in Fidelity? Oh, the spiders. So real quick on the spider. SPY.
Yeah, you got short of that near the end of the day today, right?
Yeah. I shorted it right at. Let me put the 5-minute on because you ain't gonna believe me.
Well, I see your line, so.
I shorted it at.
And by the way,
3 o'clock.
like on a 10-minute RSI, it was overbought right around that level. So I almost got some more puts at that level also.
I actually shorted it here. So that was 1440. I got into that.
Wow.
Yeah.
So I almost got some puts at the end of the day on this too, but I've been rolling some short dated, like, Monday, Wednesday, Friday type of puts on this.
Mm-hmm.
And, they ran out of gas this morning. And I thought, you know what? Like, if it comes back big, then I'll let that position kind of like earn its way back. But I'm not adding more money there now because I've already got so many other ways to play the downside. Like, what was working really well was the HYG puts. And so, you know what I did today? I basically bought another put wall for like April 1st expiration on HYG.
Okay.
Yeah.
Now the funny thing is, let me just finish up real quick.
Yeah, go ahead.
I couldn't remember the name of this damn pattern. I called it a bullhorn. I called it a foghorn. I called it everything but a megaphone this morning.
Yeah.
And I had commented on it because I was like, man, that looks just like a bear flag, except it's a bullhorn.
I see that. In the upper right window, you're saying,
yeah.
So this is a daily chart on SPY, and it's looking like a descending megaphone.
Right. And it looked just like a bear flag, a bull flag, except it was a megaphone. And I was like, well, I bet you it's going to, and I said it over and over again. I'm like, it's going to hit the top and it's going to come down. It's going to hit the top.
Yeah, that's looking pretty bearish.
And that's what it did.
Yeah. So, by the way, I was writing those iron condors in Tesla, or I'm sorry, I was buying iron condors in Tesla, which is weird because it's like I'm selling near the money options and I'm protecting it with slightly further out of the money options. Right. That's the iron condor. And the idea is like it's sort of like selling strangles, but it's more conservative play. It's more conservative in some ways, but it doesn't have to be. Like you could make the range really narrow, and that's not conservative. That's an aggressive play.
Right.
So that's how I do those, but I control the risk. It's not open-ended risk. So I like iron condors better than selling strangles. And I was doing that on Tesla, thinking that like Well, the market's probably not going to collapse between here and Friday, and if it does, well, I have all those ARK puts, right? So I
Right.
still have all those.
Nice.
Yeah. Well, I mean, they're
Well,
they're
you should
burned
be
up.
deep in the money on those ARK puts, right?
Well, I was in the money on them, but I kept rolling and doubling down, and pressing my luck, and then finally we get 10% up day in ARK today, and it just incinerated those puts. But I mean, they're still there. I still have the position. It's like, why close it when I've got other things working to the upside. I
Right.
thought about putting on like the opposite of an iron condor. I don't know what
Hmm.
that is. I got to figure out the name for that. In Tesla, back when it hit the lows, it's like, well, I could buy like deep out of the money bull call spread and like a crazy bear put spread, but I think I'm just gonna walk away from it and let the IV come out of it.
Right.
And I mean, I guess that was the wrong move because I could have made money on the upside on it. Now instead I'm writing, buying iron condors on it. I don't know.
That's the ARK trade or
Tesla.
Tesla. Tesla.
Yeah, what
All
I've
right.
got on ARK is I got put walls on it, and I've got a bunch of 105s.
Uh-huh.
And so I considered doing one of those reverse ratio rolls on ARK, but I
Uh-huh.
ended up not doing it. Where I essentially like close out the 105s, take the sales proceeds from that, and buy like 115s or 110s. And I didn't end up doing that. I just kept the 105s.
Okay. So how far out are you on ARK?
Well, so 105 is the closest to the money I have, and those were in the money I think yesterday, just briefly, or they were really close.
No, I mean date wise.
Oh yeah, good question. All of it this Friday.
Ow.
So
Yeah.
yeah, I mean, unless it goes back down, I'm not even gonna have anything to roll on those. Like they're just
Right.
toast.
Mm-hmm.
But it could easily go back down in this market, and I'm looking for. There's a couple things I'm looking for. I'm looking for high yield corporate bonds to have a really, really bad couple of weeks.
Mm-hmm.
And I'm also looking for ARK to have essentially a liquidity issue causing an implosion. And so ARK being down 10%, like that doesn't even cut it. Like I'm not looking for that. I'm looking for like, ARK down 30% in a week. And we kind of had that, but I'm looking for like even more.
Mm.
So, things got pushed to the extreme, and now it's swinging back the other way, but it's.
I think bonds are going to steal the show tomorrow because the auction's in the morning.
Yeah, good point. And TLT was up today, like a lot.
Yeah. Yeah.
It was at 140, right?
Yeah. And then it pulled off of that and I got out.
Did it? Okay, yeah,
Yeah.
last I checked, it was 140.
Yeah. It came back up at the end of the day. I was thinking about getting into it because I saw a quasi bull flag and I was, for $2, nah, I'm not holding that overnight. Especially
Yeah, well,
with the
I've still
bond
got those
auction in the
monthly
morning.
expirations. It's that back spread I was talking about like 2 or 3 weeks ago, and I rolled it down to to 139 basis, but from 141.
Uh-huh.
And I maybe could have rolled it down again at 138, but I was looking for 137 before I rolled it down.
And what are you talking about now? I'm sorry.
The TLT back spread I was
Oh,
talking
okay.
about earlier.
Right.
Yeah, and I think what I may do is I may roll that out on the calendar. I'd just like to have more time on that.
Yeah. Yeah. Well, when I first made my money on TLT, my time frame was April 16th, and then I realized, okay, so this is going to bounce around the bottom for a while, so I don't need that much time.
Yeah.
So the ones that I just closed today were dated for this Friday. So that was nice.
And if we're in a new trading range, like maybe
No, I'm
Iron
sorry.
Condors
It was a
expiring
monthly.
this week or next week, it would be a good thing to do to help pay for the roll cost on the further out stuff. Maybe.
Yeah. I'm sorry. It wasn't this Friday. It was a monthly. So.
Oh, the March monthly. Okay, so you got
Yeah.
like what, 7, 8 trading days left? Eight trading days
I'm already
left?
out of them. I'm
Oh, you
already
got
out of
out
them.
of
I'm
it.
waiting.
Okay.
I'm waiting until the auction tomorrow.
Got you.
So the other thing that I noticed today was the VIX, and I was watching the the VIX futures, and I
Yeah.
was watching the regular VIX,
Yeah, let
and
me throw VIX Central up on the screen real quick. I try and glance at this every day. So here, let me throw this up on the screen. All right, of course they're going to show an ad. Okay, great.
that's cool. I got to put
All right,
the
I'm showing 24 for the index, and then a term structure that is in contango.
all right.
So
So
pretty docile market. I mean, by 2020 and 2021 standards, but a 24 VIX is not low. It's just low for
it wasn't the
for
numbers.
this crazy market. All
It
right, go
wasn't the
ahead.
numbers that got me. So I'm setting it up just slightly in reverse of what I normally have because I can't move this over to my chart. So this morning I said we're going to breach this. Whoops, where the hell are you going? Sorry, my mouse is going screwy.
Yeah, it
We're going to
happens.
breach
Haywire.
we're going to breach this channel, this lower trend line of the channel, right? Which is at the 2410.
Okay. Yep.
And I said, depending on how far below we get, these two last breaches is going to decide whether the VIX is going to eat eat it, or is it going to come off of a level that I have. And I said, if it holds this line or something similar,
Yeah.
it's going to get down to this blue line that I have here,
And
and
yeah,
it's gonna
that chart you've got on the bottom right with those wedges showing, I mean, that tells a big story right there. It's running out of time on this falling volatility.
which one, the bottom right or the bottom left?
Well, both. You've got wedges drawn on both of those.
Yeah. So yeah, volatility is going to pick back up, and as long as it stays above that blue line and it doesn't breach it, we're going to have a lot more volatility and down days in this market looking forward.
I wish they would reverse split VXX because, I mean, that thing is so cheap that I don't like trading the options in it anymore.
I don't mess with the VXX. That's the VIX of the VIX,
Yeah,
or no,
it's
that's the
the ETF
VVIX.
for
It's
the near term short dated VIX
VXX.
VXX. Yeah. So do you trade options on the VIX futures?
No, no, I trade options on the VIX.
Got you.
But I use the VIX futures because they one gives away they give away each other's hands a lot. One will act in a certain way that I know what the other one's going to do. And
Yeah.
it's usually the futures that dictate what the VIX is going to do. Usually.
Yeah, and that's why I'm looking at the term structure all the time.
Okay. Gotcha. Very cool. I like
So, and
volatility.
by
I
the way,
like
like,
studying volatility.
the VIX does this all the time. It makes these declining wedges, and then you get these big spikes. And so, we saw what happened to tech without even really moving VIX. And what's
Right.
crazy about that to me is there's a huge overlap with QQQ, the Nasdaq 100,
Mm-hmm.
and the S&P 500.
Mm-hmm.
So the strength we've seen in energy and financials. I heard about the headline that Kathy Wood is predicting like rough turbulence for XLE and XLF, but a bright future for tech. That can mean a lot
Yeah,
of things. I mean, when
I
she says
saw
a
that.
bright
I saw
future for
that
tech,
interview.
go ahead.
No, I'm just saying I saw the interview.
Okay,
That's
I
all.
didn't watch the interview. So what was the context there?
You've heard the gist of it. I mean, they just kept going on about how, and I don't know that it was the banks and the XLE were going to fail in any way, shape, or form. They were saying that she was implying that they were going to outperform, is what I heard.
Hmm.
That was the gist of what I heard,
Well, I mean, they
which
already have
shocked me.
been, and at one point, does overbought in a falling market. It just reminds me of the dot-com bust so much because the Nasdaq there went down like from the 2000 peak, it went down like 80% or something by 2002.
Uh-huh.
And I mean, it just the market just kept on caving in over and over again, and people had built up the habit of buying the dip for so long, and like, why wouldn't all these tech companies and internet companies be worth a lot? I mean, people had seen their friends, their neighbors, their coworkers make millions on this stuff. Maybe they had made a bunch of profits, and like everybody kept chasing that game for a really long time. And it reminds
Right.
me of right now because of how much exuberance is in the market with these SPACs and with Bitcoin and like, I mean, there's true believers everywhere you look, and the whole diamond hands phenomena and Dave
Yeah.
Portnoy making and like trading is like somehow a household thing now.
Oh, I hate that fucking guy.
Yeah, I mean, he's just a sales guy, man. I mean, he's not a trader.
He
He's a
grates on
betting
my
guy. He's got a
nerves.
personality and he's got a big following. But trading for him, like he's a Johnny Come Lately, and the thing I don't like about it is that it's people can get hurt following people who get the wrong idea that they know what they're doing because they made a little bit of money at this.
Hmm.
But I mean, as we've seen lately, I mean, there's a lot of people like even that Puru guy. Puru? You ever follow him?
Mm-mm.
So he's a true believer in innovation tech companies, and he's a buy and hold forever like value investor in tech companies kind of guy. And it's
Uh-huh.
interesting. It's like a fascinating niche. The guy's made a lot of money, kind of like the ARK fund. Right place at the right time at the right idea. Made a lot of money, and like he just doesn't know how to tell when the party's over. But I saw him kind of second guessing himself on Twitter the other day. It was interesting. I didn't say anything about it because I mean, the last thing I want to do is like spook somebody into selling something that they really believe in. Like I mean, not that he would be listening to me anyway. I mean, he knows what he's doing. He's like a savvy investor, but at the same time, he's also a true believer.
Hmm.
So
I don't
I'll
have a
tell you something
problem with,
about options traders, though. By the way,
huh?
there's something that I think they have a blind spot on. Is a lot of them like options traders, futures traders, and day traders. All three of them tend to play from a position of a cash basis, and they have a concept of like going flat or like going to cash. And
Hmm.
there are more than just day traders do this too. Momentum traders do it. They go to cash for a bear market.
Yeah.
But the thing I don't like about that is for them, cash is a neutral position. But for me, cash is like, I'm not saying cash is trash, but cash is a position. And, the USD, the dollar, moves in relation to these other currencies, and not just foreign currencies, but also commodities. Like these things are all just relative to me. And
Hmm.
so, like even though my broker keeps books in cash, like that's the only real reason why cash has like a special importance to me is
Hmm.
because of like, the brokers keeping track of margin calls in dollar terms, you know.
Hmm.
But I mean like going to cash or like being in all cash overnight or something, that doesn't necessarily like make me uh, have a deep, be a deep sleeper at night.
Oh, you mean like you're not relaxed? If
Well,
you know,
I
like
mean,
if you're
well,
just all
cash is a
cash?
position. I'm well aware of like how it can be destroyed by inflation, and a lot of people who are, they go flat and they think that like, oh, now I can like, oh, what a relief. I'm out of all my positions. I'm all in cash. It's
Right.
like, no, dude, like that cash could get, inflated away from you. I mean, I don't know how many days and nights you've been holding that cash, but like, it's not always good. It's good in deflationary times. What causes deflation? Well, technological innovation can cause deflation.
Hmm.
Monetary policy can cause deflation.
Right.
Changes in fiscal spending can cause deflation. Let's see here. What else? Open market operations, or even interest rate differentials across other currencies. Like there are so many things.
Right.
Oh, here's one. Here's one that can affect the price of cash.
Uh-huh.
Is if there's a big new gold deposit found. Like, let's just say, for example, hypothetical. Like, forget about mining. Say that like a giant golden asteroid strikes the planet. Okay,
Uh-huh.
or maybe like an oil and mineral rich asteroid strikes,
Right.
and maybe it hits like in a really shallow spot in the ocean, and we're able to like go recover this thing,
Uh-huh.
and pull, I don't know, like trillions of dollars worth of minerals and resources from extract from this asteroid.
Mhm.
Well, I mean, what does that do to the economy? What does it do to cash? You know, what does it do to the price of gold and oil and platinum and lumber? So, I mean, these are situations that can happen. It doesn't even have to be an asteroid, right? Like, that's just like a very
I
friendly
got you.
visual. But the point
I know
is,
what you meant.
cash is not stable either. Look at,
Right.
compare it to Bitcoin, right? People are saying, like, oh, you were holding dollars. Well, sucker, you should have put your basis into Bitcoin, because had you done that, had you gone flat into Bitcoin, then think of where you'd be right now instead. I mean, one Bitcoin, $50,000. I remember looking at it when it was like $100.
What? Because a bunch of whales got together and decided they were going to move the price marker up? Get out of here.
Oh, I'm just saying, man. Like,
No, I just I hate it when they do that, man. It really drives me nuts. Like their market isn't manipulated. Like they have a
oh
pure,
yeah, yeah, as if they have a pure
untouchable
market.
fucking
Yeah, I'm with
market
you,
or some
dude. I
shit like
agree.
that.
Like, it's a ridiculous idea. But anyway, like, cash is super manipulated too. So,
Right.
and there's like FDIC and all this stuff. Like, it just go back and look about the when the buck broke in 2008, 2009, in
Right.
that financial crisis. A lot of uh, what was it? Community banks and oh gosh, what is it? What am I trying to
Mortgage
think of?
mortgage banks.
No, no, no. Credit unions. Yeah, they put their money into certain overnight investments, and they actually had a negative interest rate imposed on them just briefly, and that was like breaking the buck. There's some cool stories out there about that, but yeah, I
Huh.
mean, cash isn't really what you think it is.
I didn't know about that. I figured they would have just opened up the window or the overnight window for them. I guess they didn't.
Yeah, well, I mean, there are some
Unless
places
you're
where
JP, unless you're JP Morgan or Wells Fargo or one of these other big guys, they don't open up that window for you so hot, quick.
yeah, well, I mean, we're small fish, but you put your money into the credit union, and then they're taking all their account and putting it into overnight investments, and when that stuff
Yeah.
goes negative, what are they going to tell their savers?
Right. No, I
So
hear you. I hear you.
yeah, I mean,
But it's not
so the
like
buck
it's not
broke
like
briefly in
big banks
2008,
haven't.
2009. It's a true story,
It's not like big banks haven't screwed up.
and I
And
think it's
I mean,
breaking
those
again.
stress tests are a fucking joke. I
What
don't even
is?
know why they bother announcing them. The stress tests.
Mm. It's just regulatory. Yeah, it's imposed, and
Yeah.
it's regulatory, and they've all got little workarounds now. So,
Yeah.
all right, what other charts do you want to look at? I mean,
Okay.
I'm not really trying to get into stocks right now. I mean, I'm pretty happy with the positions I've got, other than just maintaining them. I still have Fisker, FSK. I've got a swoosh position in that one. AFA, Tilray. I did not get Square. I did get Palantir, and that didn't really do much. I don't
uh
think it did much. I didn't even really look at it today. I have a position. I didn't even look at
TLTR.
it.
Flat.
Yeah. That's why I didn't notice it, because I'm looking through my holdings, and there's a lot of them in there, and when things aren't doing anything, I'm not necessarily always looking at them.
Right. I'm looking for the VIX to go up tomorrow. I'm looking for crude to go down. I'm looking for the oil. I'm looking for the dollar to continue down. Um, I'm looking for American Express to go down. I'm looking for the yield to go down, but I'm also looking for the bonds to go down concurrently, because I think it's going to be a horrible auction.
Oh, you know what we got to look at?
Hmm.
Nvidia. We didn't talk about Nvidia yet. So
All right.
Nvidia made a really important move yesterday. It fell a lot, and it actually broke
Oh,
like a really major support level yesterday.
oh, you forgot to do XLF.
Oh yeah, we could talk about XLF too. But let's just cover Nvidia real quick. So
Yeah, man.
on that daily chart that you've got in the upper left, it's kind of hard to
Uh,
see, but like,
no, it's my upper right. Oh, wait a minute. I'm sorry.
no,
Yeah, you're right. You're right. You're right. Let me put it where it's
okay.
supposed to be.
Yeah. Okay. Great. So yesterday you could see we closed below that major low. You've got like a red line there. Awesome. Yep, that shows it. You've got
Yeah.
a red support line there that you drew, and it closed below it. Now
All right.
today, a healthy bounce. However, like this chart is now broken. In fact, it's bouncing up, and in one more up day, it's going to hit support, which is that pink line, the next one at 512. So if it does, probably what I'm going to do is put on a bear put spread expiring Friday, and I may just go outright with the options if they're cheap enough,
Mm-hmm.
and essentially go short Nvidia tomorrow if it's up. If it's not up, I'm going to wait. So I was like really bullish on Nvidia. You remember that? I talked about it a lot
Yep.
on the show.
Yep.
So, this thing breaking down, it just adds to the story about how weak this market is. I mean, that is a major failed breakout in February that this thing had. I was
Yeah,
long
it is.
Nvidia going into that, thinking it was, here we are, blue skies. It's going to run up like Apple, and then no, just it fell apart. And I got out
I
of it.
I think it'll get to the bottom of the ascending channel, if nothing but a wick, and then that'll be it. But I agree with you. This looks like horrible.
Yeah.
It really
So
does look horrible.
any strength on Nvidia to me looks like a shorting opportunity.
Yeah.
The way I'm going to do it is I'm going to do it with like a 1 inch punch kind of a trade. Something expiring this Friday.
Oh, they got dividends payable.
When's the dividend?
I'll tell you in a second.
Okay, it's not big. Okay,
Today.
3.9. Oh, that's today.
Yeah.
All right. Well, that's out of the way. Excellent.
Yeah, it is. Well, that might be it for Nvidia.
Yeah. So, by the way, if it
Especially after
doesn't
that
show
fall.
strength in the next few days, then what I expect is for some inside bars to happen, and then we'll like let a break of that consolidation tell us which way to play it, long or short.
All right.
Yeah. All right. So that's my breakdown on Nvidia, and like this is like a major signal about the market. Nvidia is like a major company. It's one of the biggest in the Nasdaq. It's one of the biggest in the S&P 500.
Mm-hmm.
So I can't believe how weak this has been. You have no idea how much money I've lost in Nvidia like over the last year. It's just sad.
You sound like
Because
me.
I had like a bullish view on it that was maybe like way too rosy.
You sound like me at Tesla.
Yeah, it can happen,
why I
man.
don't-
Anybody can
That's what
get
I don't
chopped
try.
up.
I made $7,000 on it one time, and after that, I lost it all and then some. I hate that fucking stock.
Yeah,
I just do. I went long when I should have went short, and I went short when I should have went long, and that's when I told myself if it ever hits 250 again, that's it, and I didn't. So, are you ready for XLF?
yeah. Let's jump.
All right, here we are. XLF daily.
Okay, I'm trying to keep this stream up with your charts. We're good. Go ahead.
Okay, so I did a little bit of time on this, and it didn't work out, as you can tell. I didn't like the way that it looked. It didn't line up with anything, so let me get rid of it.
Okay.
Remove. But I did put some levels in, and let me pull that back real quick. What I'm noticing is this is telling me that the yield wants to go higher. That's what this is telling me, literally.
Okay. Well, I mean that candle today, that's an
That
interesting
doji?
shape.
The doji?
Yeah, and when I see a candle like that, if there's big volume, that's like a get out of the way candle. But if there's not big volume, then it doesn't really mean a lot.
I don't know what you consider big. There
Yeah, that's bigger
was
volume than it has been. So, I mean, that's kind of a bearish looking candle to me.
it's 117 million shares traded.
Yeah.
I I don't know.
It's
I
not,
just
it doesn't look super negative, but it doesn't look constructive. It looks like distribution to me. It
uh
didn't close anywhere near the highs, and it actually closed below the intraday range of yesterday's bar, and the volume's big. So
right. I'm
that's
looking
kind of
for my
negative. Are
I'm
you
look
are you taking the long side or short side on this?
I'm taking no side.
No side. Okay.
Yeah, my side is in American Express.
Yeah, I got you.
All right, there's
AXP is a holding, I think, of XLF, although I'm not sure what percent allocation.
that is your accumulation distribution, and it is distributing. No, yeah, it's on the downside of distributing. It's about to start accumulating here soon. But I agree with you.
Yeah, it looks
It's
like
an
it wants to
ugly.
go back down to that line you've showing around 32.
This one,
Yeah. It may not, but look, I mean, it's gotten choppy. It doesn't, look at all those wicks. It's just kind of all over the place.
yeah.
Something I want to look at is I want to look at how volatile is the Nasdaq really getting. It's not really. I'll look at it after Chris. You're done looking at this chart. So go ahead.
All right. Just give me a second here. I just put it down to a 4 hour. You could interpret that as a bull flag, or you could interpret it as coming off of.
Okay, 4 hour. It looks actually better on the 4 hour. It just looks like it's had a small little breakout from a consolidation.
Yeah. Is this mine? Give me a second. All right, this is my original oscillator. This is the oscillator I built, and this tells me short the hell out of it.
I got you. So you're looking at the bottom down there, and you're seeing those lines kind of rolling over.
This,
They're crossing under that line near 100%, and they're going lower.
well, the way this works is that when these all peak, which they kind of did right here, not completely, but they pretty much, for all intent purposes, peaked right here.
Yeah, that oscillator at the
That
bottom.
was
Yep.
that was right. That was the high. When
Yep.
this green line breaks free of this overbought area, that's when you take your short. When this green line, this moving average, this 5 day moving averages, crosses above the 8 day moving average, which is the fuchsia looking purple thing, that's when your trade is over. So I would be shorting the shit out of this.
Got you. Well, yeah, but you're
That's
already in a short AXP, right?
right. So there's no need for me to get into XLF. But if anybody's
Yeah.
listening, make sure it doesn't bounce in the morning. If it doesn't bounce in the morning, I wouldn't be afraid to take 5 contracts out on this for next week. 10 days.
Yeah.
9 days tomorrow. I mean, don't let my words, be inscribed on your tombstone, but
Yeah. Well, I mean, if you're watching this show, you already got to have a handle on managing risk, and
right.
it's. I got a little tag up that says "not financial advice" on the screen, so you own your trades.
Yeah. All right. So sorry, my mouse is really acting freaking screwy. Let me turn this thing off for a second.
Sure. Hey, while you're doing that, I'm going to bring up the QQQ chart, and I want to look at the ATR on it real quick. So I'm going to bring that up while you're looking at that.
Oh, I fixed it. I'm good.
All right, give me 1 second to talk through QQQ here. Let me make this chart bigger.
Yeah, man. Go right ahead.
All right. So what I'm looking at here is all the way down at the bottom of this chart, you'll see the ATR. And I have a 14 period daily ATR. This is a daily chart.
I got to make you bigger.
What's that?
I got to make you bigger.
Oh, got you. Okay. Yeah, I made that chart about as big as I could get it without making the bars bigger. But
okay, I'm good.
Yeah, so what I want to call out is all the way back here in the March of 2020, the lockdown crash. You notice that the ATR was rising through that whole thing. And then when we had this drop in September, it was rising until it leveled off. And when it leveled off, that was kind of like, that meant that we really kind of ran out of momentum to the downside. It's not really a lagging thing. You know, it's, so my point is, if you look at the rising ATR, that volatility increasing, it causes institutions like risk parity funds to reduce their they reduce their stock market exposure. You know, they reduce, you know, because they get the same amount of movement in their portfolio for holding a smaller position. And so they, you know, when volatility is higher, they decrease their position. So I've actually, I wonder what the percentage is. Hang on, let me get a calculator out because I like to look at this. It's a really helpful thing to calculate. If you take the daily ATR, okay, which is 8.18, and we divide it into the current closing price, 311, we show a 2.6%. So the daily ATR is now 2.6%. That's really on the high end. You're getting into into like liquidation level of volatility.
I thought that was 3, but okay. Yeah, 2.67 is, pretty high.
Yeah, 2.6%. So this is not like a VIX measure. It's completely independent from that.
Right.
What I'm saying is that the ATR as a percentage of the share price. So this is really a way to measure the realized volatility. So I'm really taking a measurement of realized volatility. I'm saying realized volatility is anywhere in the range between 2.5 and 3.5%. So I got to times this by 100 to get it to percent. So let's do that. Let's times 100. So now it's a percent. 2.6%. That's just now moving into the range where it's a danger zone.
Right.
And you'll find that if you plug this into a model and you use it for market timing, you'll find that what I'm saying is true. If you start reducing risk when it gets above 2.5 and you're all the way out by the time it's 3.5, then you're going to avoid a lot of the major crashes. So, I mean, that's some back testing and modeling that I've done in the past. And this is true. It's true for QQQ. It's true for SPY. And by the way, such a timing mechanism timed the top of the .com bubble. It actually got you out on the spike up because it became so volatile, rather than normally we see it on the way down.
Mm-hmm. Pretty cool.
Anyway, all right. So there's that. So I'm seeing like a risk indicator flashing red here on the NASDAQ 100.
Based
Not
on
surprising.
the ATR percentage.
What's that?
Or based on the percentage that you derived from the price action and the ATR.
Yeah, it's just a measure of realized volatility. Realized volatility is rising, and it's rising into a danger zone.
Right.
Yeah. So anyone could go out there, take the Yahoo Yahoo Finance data, and plug it into, I don't know, a spreadsheet program or Excel, and do those same calculations. And do that research for yourself, and you'll see what I'm saying is true. It doesn't mean that it's gonna crash. It just means that, like, when that risk indicator flashes red, that happens before every major crash. It also happens with false positives. So,
hey, what's the worst thing that could happen, right?
Yeah, I mean, it just tells me to be more cautious. Be careful with buying iron condors. Be careful with, if I have gains, take them sooner, that kind of thing. Make sure I have protective puts, things like that.
Very cool.
Yeah.
All right. I don't want to do
this. All right, so you have QQQ up.
Yeah.
Did you want to flip to something else? I'm done talking about QQQ.
I was going to tell you I was done. I'm done.
Okay.
I'm finished.
All right. Yeah, well, we can end it here.
Unless there's something else you want to...
Yeah, thanks for coming on, Chris. Do you want to talk about your show real quick for people who may just be learning about it for the first time?
If you guys want to see what it's kind of like, I have a half an hour that I posted from this morning, and then I have another hour that I posted from this morning. If you just want to click in tomorrow and hear me ramble and stuff, and listen to see if I have a trade idea, feel free to click on that link inside of my profile and give me a few minutes of your time. If you like what you hear, stay. If you don't, leave.
Awesome. So yeah, I've got Chris's Twitter account listed in the description of the video. It's also showing on the screen. It's at STFR Trader, and I'm at John Tate, JONTAIT. So STFR Trader, that means sell the fucking rip trader.
Yep.
All right. Thanks for
Sir.
joining, Chris. Good show.
For having me,
And
John.
thanks for watching, everybody. Hit thumbs up on the video, subscribe, and share it with your friends. Help us get the word out about this new show.
All right,
Thanks.
cool.
All
Bye.
right. Good night.
Good night, John.